Guys, it is my pleasure to stop sharing my trading view screen with you and bring on our guest for the day, creator of the Strat and educator, trader, Rob Smith. Coach Spencer, if we can get Rob.
Yeah, I just wanted to know that Rob's doesn't have a camera, so it's just going to be the dulcet.
Rob has a great voice.
Rob
has a radio voice, guys. Okay. He's like Casey Kasem with like 10 cups of coffee.
All right, here we go.
Rob, let me know if that's an accurate description.
Yeah, it's something like that. It's always get fired up because we've always got a lot going on. With the Strat, there's always so many signals that we're following. So I've got to be like that because I'm always talking to a large audience that's trading a lot of different things at the same time. So I'm always trying to fragment it and be like, all right, you guys here, you guys here, you guys here, you guys here now. So yeah, always fired up, man, especially when I get a new audience of people to talk to, to introduce to the Strat because anybody who's not familiar with me, what you're going to hear me say a lot is that eventually everybody's going to trade this way. It's just no two ways about it. It makes too much sense.
Rob, I love it. I love it. And I think it's great. And what I want to know for the folks here today, if you wouldn't mind letting us all know, what is the Strat?
Okay, basically it's short for the strategy, right? And so we use hashtag the Strat so we can communicate on Twitter, with I'm up to 41,000 followers because and so we've got a lot of people that communicate very quickly. So basically what it is, am I going to be able to screen share today?
Yeah, you should be able to go to the bottom. It's a lot like Zoom.
Okay.
So if you go to the bottom, you see a share.
Share. There we go. Let me see.
And then Coach Spencer will make sure you get hooked up.
Okay. Share screen. And let's see. I'll make sure it's gonna. Okay. Yeah, it's gonna tell me which ones. Because I got eight screens on this one. And
guys, if you've ever seen, go on Twitter. I don't know, Rob, if you've got any pictures of your setup. Do you call it the Beast or the Monster?
I've got two computers. One is the Beauty and one is the Beast. The Beast has been around 10 years.
So if you guys imagine like your serious trader setup with like a billion monitors, this is like that with like meme energy injected in it. This guy has so many monitors, absolutely insane. But it's because you're looking at so many things at once.
That's right. It's because once you understand the Strat, which if you're new to the Strat today, I'm very excited to talk to you because one of the things about it is that it customizes itself to who you are. And what I mean by that is that Ryan has interviewed myself as well as 6 other traders and continues to interview with more Strat traders because everybody trades it a little differently because you're going to be customizing them. Like if you have $1 million, do you have $50,000? Do you have $50,000? Do you have $5,000? What type of a person are you? And it customizes itself to who you are. And I'm going to point out exactly what I mean by that, but I want to show you the setup since you're pointing it out. Let me see. Sorry, I was spazzing out there trying to figure out how to get in here. Hold on. Come on.
You do what you got to do. I'm going to step away just for 1 second. I got to take care of a thing. Spencer here's got your back.
Gotcha. So here's my setup. And so it's 16 screens. And the reason some people say that's overkill, but the thing about it is that once you understand the Strat, there's so many signals at any given day. There's so much opportunity. All right. So I always got to speak to like brand new audience, right? But this is what I'm looking at right now. But let's take a look at the monthly SPY. All right. So in a nutshell, it's very basic and it's going to make sense to you. Okay. There's only 3 things that can happen from one bar to the next. Okay. So if you look at here, we call them the 3 scenarios. There's only 3 things that can possibly happen. You'll notice this is an inside bar. It wasn't strong enough to take this out high, and it wasn't weak enough to take that out. All right. That's a scenario 1. That's an inside bar. Do you want to trade that? No, it's doing nothing. Right now, on a monthly basis, you can have more time and a bigger range. So you can still, on a monthly basis, you could still do that, but you want to be aware of it. The other thing that can possibly happen is you take out one side here. This bar takes out the low. That's a 2, scenario 2. In this case, it's a down. The other thing that can happen is this, an outside bar that takes out both sides. This is one of the most important things you can understand. that this phenomenon happens. So as opposed to classic technical analysis where we'll be looking for chart patterns, you want to look for this. Once something starts to fail a previous range, right? Tries to take it out and starts to fail, it's going to take out the other side. That phenomenon definitely exists, all right? And so understanding that is how you properly gauge magnitude. How far is this thing going to go? Because we know that that phenomenon exists, once you start failing, you're going back the other way. Another thing that you want to look for is things coming back through a previous range. So you'll notice this is a large broadening formation of the monthly S&P SPY, right? Higher high, lower low, higher high, lower low. If these 2 months were one bar, they would be an outside bar of all this, right? They would, right? And so understanding that phenomenon is the most important thing you can understand, because when you go back to classic technical analysis, you have to understand that classic technical analysis has failed miserably, all right? Maybe 90% of people who try and trade have failed. And if that's you or you're struggling, don't blame yourself. It's applying the wrong science, all right? Price doesn't move, it aggregates. For every buyer, you have to have a seller. The question is, who's getting their price? Also, the other aspect of the strat, not only that we understand this, there's only so many ways price can reverse and only so many ways price can continue, right? So if you just know the key reversals, there's a few more, but if you look at this, one type of reversal here, this is a 2 up by taking this out, right? 2 up, 2 down, right here. This is your reversal. And if you knew that in October 2018, you caught this. There's only so many ways it can continue. Your inside bar, your 2, 1, 2 down. Another reversal, a 2 down by taking out the low, inside bar, 2 up. Right? And another way it reverses is the 3 itself. Goes up, boom, down. Right? Now, the other aspect that's going to make total sense to you, right, is time frame continuity. We know what algorithms are doing. All right? We separate by price and time. The monthly, the weekly, the daily, and the 60-minute opening. Right? Okay, so the question is, who's getting their price on the aggregation series? Right? Now, if the openings are all higher, if the price is higher than all those separate openings, we know what algorithms are doing, because algorithmic trading is over 70% of trading now, and people think that they're these evil robots coming after you. They're not. They're stupid. They're telling you exactly what they're doing. So you have to tell a program 4 things. What do you want it to trade? Do you want it to buy or sell? How do you want it to buy or sell? By taking the offer or staying on the bid, or how do you buy, or how do you want it to sell by hitting the bid or staying on the offer? And when do you want it? When do you want it to do it? Now, when you have 4 separate openings, see maybe some SWKS this morning, Netflix. When you have 4 separate openings, right? And we're about to have that for the first time this month in 15 minutes, right?
And really quick, you might have covered this, but I can't see. What increment are you on right now?
Right now, this is a monthly chart of SWKS.
Got it.
Okay, so for the month, this is great. If we go to the weekly, it's green. If we go to the day, it's green. And if you go to the 60-minute, it's green. And a nice move here and an outside bar. So once this thing starts coming up, we know this thing's going to go 3 here. So what we know for sure of algorithmic trading, they told them, SWKS, I want you to buy it, and I want you to take the offer, and I want you to do it right now. That's exactly what they told them. So we can pick up on algorithmic trading all day long. They're stupid. They're not that smart. So if you go back to the SPY, right? Based on what I just told you, right? On the monthly, everything is crystal clear, right? Now, if you were trying to find follow a 200-day moving average, you would have gotten destroyed in here. So let's take a look at just following the SPY of what I just told you. This is a 2 up, 2 down reversal. This is a 2, 1, 2 continuation. And this here, when this is moving down like this, full time frame continuity to the downside, right? Now, 2, 1, 2 reversal back up, right? Yes. Then up here, the failed 2 goes 3, continuation 3, 2. And here, very interesting spot here. Way below the 200-day moving average, right? It's like, however, this was April of last year, which is a new quarter, which means as soon as this opened, not only did you have quarterly continuity, but the month, the week, the day, and the 60 went green, way below the 200-day moving average. That's when the algorithms were told to buy, and we knew that. So then when it came up here, we're still an inside bar. This is the 2-1-2 reversal here. This is where you can get long. Then you're going to have an inside bar here, consolidation.
Mm-hmm.
Boom, back to the highs, right? It is. And so when we do this, it's like what we can do is the market is always going to trade in the direction of continuity, and the most 2s in the same direction or failed 2s go 3. It has to. There's no way it can't. So when we scan, I don't have to look at a chart. I can tell you what the market's doing simply by scanning, by looking at how many 2s are in what direction on a monthly, weekly, and daily basis. And we're always constantly doing that. And so when people are trying to guess what a reversal is, you don't have to do that. It's like we know what they look for. It's a 2-2, a 2-1-2, or a failed 2 goes 3. Now, there's a few other ways, but if you simply know that, you'll hear people say, I want to buy the dip. I'm like, you don't buy the dip, you trade the reversal, right? You need to wait for a reversal. When things occur really matters. Right. So some people will sit there and say, well, if it breaks above my level, I'm going to get in. I'm like, okay, well, what if it does that 5 minutes before the close on Friday? What if it does that on Tuesday at noon? What if it does that and the earnings are coming out? Right. When things occur really matters. And a lot of people don't understand that, because especially when it comes to the psychology of looking at a chart. Right. So every 60-minute bottom of the hour is like a new day to us. Right? Because you're about to see a new bar. So when you see something like here, when it's going up here, and you're like, no one at this point, before any of this, would say the chart looks bad. You're green and you're going into the highs. At that point, they'll say, well, I'm going to wait for the pullback and then I'll buy something. Right? And then, boom, now the thing about higher highs or lower lows, because we know broadening formations exist, that's when you're at risk of getting killed. So if you've ever made a little, then gotten killed and lost it all and then some, that's because you didn't know about this phenomenon, right? Now the range is expanding, right? And you get killed, right?
So Rob, for folks that are not taking notes right now,
Mm-hmm.
do you have any type of material that lays this out in pictures so people can kind of keep it in front of them while they trade?
Oh, yes. I'm at tickertalker.com, and I've got an extensive library of newsletters and a course that you can learn it all. I'm on the headset 7 hours a day, directing the traffic. So right now I abandoned them to come see you. But the good thing is we can communicate very quickly. I make a video every single night, and it's rarely over 3 minutes. Because we know what to look for. It's no subjectivity of 15 minutes of like, well, this could be a buy and this is a thing. It's like, no, these are the buys, these are the sells. This is what we're looking at exactly, right? Because we know. And so the communication is really key, where we can communicate very quickly. So when I'm on the headset during the day, everybody knows exactly what I'm talking about, right? Because we all think exactly the same way. That's when Ryan started interviewing a bunch of us, that he picked up on that. He's like, you guys all think exactly alike, and yet you traded a little differently, right? Because everybody's going to be different. I'm like, a lot of people don't have the big accounts to trade Amazons or whatever. And a lot of people don't want to trade the real animals. They said, Rob, give me the slow and steadies, because I make a macro video once a month about the quarterly and yearly signals. And so some people will stay on those signals because Ford Motor Company And we like to call it Grandpappy because I'm like, really? You're trading Ford? I'm like, but Ford finally gave the buy signal. Here's your broadening formation at Ford. And I'll show you where our buy signal was on a macro basis. Here, let me get my TC2000 up there.
And Rob, we're at about 4 minutes left here, about three or 4 minutes left. So I want to make sure that folks that are like me, I want to join. I want to have the same brain as all the stratters. Okay. All right, I'm jealous. I got FOMO. So make sure that we know how to really get in here. But go ahead and finish your thought here.
Also, here at Benzinga, there's a Strat chat room. Go there. Benzinga has the Strat chat room. Go there. You're gonna meet people right there. They'll send you.
That's in Benzinga Pro. Go on pro.benzinga.com. Go in the Strat chat room. There's a bunch of stratters in there.
Yep. And my youngest stratter's 14. She's been trading for 2 years. And she's been trading Bitcoin long for 2 years. And she's awesome. So I wanted to show you this.
Man, the Strat has to work great on cryptocurrencies like this. So purely technical.
Oh, yeah. Oh, yeah. So if we go to the SPY, I just want to show you.
That's fun.
Over time, on a yearly basis, if you were to manage money, right, and you were just following the Strat, as a matter of fact, last year, Merrill Lynch Private Asset Management has dedicated $1.5 billion to Strat-based investing. Now, if you look at this on a yearly basis, SPY, this is a 2 up. This is a 2 up. This is going back to the 80s. 2 up, 2 up, 2 up. Still good. 2, 2, 2, 2, 2 up, 2, 2 reversal. This would have gotten you out or short in the year 2000. 2 down, 2 down. Inside year here. In 03, this is a 2-1-2 reversal year. 2, 2, 2. Financial crisis. 2, 2 reversal here that wipes them out. So one of the things about going back through a previous range, not only do you have the algorithm selling, right, but we want to go back to a previous range. And the important part about that is because if the algos are told to sell, when you go back to a previous range, people are going to be stopped against this obvious pivots, right? And so as they get stopped out, they remove liquidity and makes the price move faster, right? So you always want to be coming back to the previous range. But then look at this. Here's your 2-2 reversal, 2 down, 2-2 on the year. Back up you go in 2010 and 2, 2, 2, 2, 2, 2, 2, and you get the rest is history. And then last year, the big outside bar. I don't have time to talk about that, but looks like we're running out of time. But yeah, here's Benzinga Pro. I'm on the headset at Ticker Talker all day, but I'm also chatting with the stratters here at Benzinga Pro. So come see us because you're already there.
Absolutely. So I dropped a link to get right over to Ticker Talker. And then also, guys, as always, it's pro.benzinga.com. The chat room has it has actually a separate room dedicated to people using the Strat. And then I think what a great starting point is, Rob, and correct me if I'm wrong, and this is at least what I feel I need, is a little bit of a cheat sheet on the 1, 2, and 3.
We got that. We've got that. So we have our setups and our magnitude. I can get that to you. Let me see. Hold it. Whoop. Because here's another thing that's key. We already know what winning and losing trades look like. All right. Winning trades look like this. Favorable 2, favorable 3, time frame continuity in your favor. Losing trades are trading a 1, fighting a 2, getting killed by a 3, and time frame continuity against you. So when you have that checklist up, let me get that for you real quick. When you have that checklist up, we already know what winning and losing trades look like before we even get in there. Checklist, where are you, boy?
And while you're doing that, I just want to let folks know as soon as we wrap up here with Rob Smith, creator of the Strat, we're going to go over that contest for that big old Benzinga giveaway.
All right.
We'll talk about the rules and so forth.
Right here is what I tell people to keep on their desk. All right. Also, when you trade, it's good to say out loud what you're doing and why you're doing it. Right. So most people know that a trader's worst enemy is themselves. And one of the good things about trading the Strat is we all think alike, right? And so that we believe that trading should be a 2-person job, right? And so when you learn the Strat and then you have me on the headset all day, I become the world's greatest assistant. and you're like, oh, I want to go to lunch and I want to get out of this and I'm making money. I'm like, still good. That's still good. You do not sell that. It is still good. Right. And that's a really important aspect of what we do, because we all communicate the same way. And if somebody steps out of line and breaks one of these rules, we know they're going to lose. And we're like, don't do it. don't. So
I love the community aspect. So there's two wings going on here, guys. There's a unique form of technical analysis, little bit new age, right? And then in addition to that is an aspect of community, the concept of trading together. So super, super cool. Rob, that's why I wanted you to have you on, so that you could share that with folks that weren't aware of it. So thank you so much for joining us today. It's absolutely been educational. It's been a blast. And I would love to have you on again in the future.
Definitely, because here's one of the things that we also have that you were asking about right here is all the strat combos. There's only so many ways that price continues, and there's only so many ways price reverses, right? Once you know this, you know exactly what you're looking at. You line it up with multiple time frame analysis, and we don't think anymore. We know what's happening and why it should happen. So thanks for having me, Neal.
Thanks for coming on, Rob. And guys, again, it's tickertalker.com to catch more from him. We'll drop his Twitter handle in the chat as well. And you can find more Stratters and sometimes Rob himself in the Benzinga Pro chat dedicated to the Strat. Rob, thanks so much, man, and have a great Tuesday, sir.
All right. Thank you. You too. All right. Bye.
Thanks. Guys,